Hello and welcome to this week's episode of The Capitalist Investor. As always, you have me, Diamond Hands D, and we got Cool Hand Luke back in the saddle, and Tony the Tiger. What's up, guys? How we doing today?
Doing well, man. Doing well.
I enjoyed my vacation, Wednesday vacation. I was off for the 30 minutes we do this, and it was nice.
Yeah.
I just sat back, did a little bit more other things, got some more work done. Maybe I should just stay away forever.
Sounds like someone got their feelings hurt.
I had one person reach out to me. They missed me, though. I had one person. I appreciate you who reached out. You know who you are. Thanks, Mom.
Thanks, Mom.
Just kidding.
Man. Is he trying to leave us?
He's
trying to leave us.
He seems,
I guess I'll put an ad out to see who wants to be on our podcast.
I'm glad to be back, ready to rock. Big day today, which I guess will be yesterday when the podcast comes out, which we'll talk about a little bit today.
Yeah.
Got NVIDIA. We've got some recession talks coming back, highlighting those a little bit. We got maybe COVID coming back. We'll talk about all that.
Yeah, we got our canceled / get off our lawn section on COVID, earnings, and recession. So
no one wants to come on my lawn. I need to pull weeds, and my house looks like crap right now. So
got to get on that lawn maintenance.
Yeah. I do. Or just hire somebody. High school kid for $50, whatever it be. That's what I need to do.
Yeah. Unfortunately, I have hired someone.
Yeah. I mean, I think that at some point you have to look at what your time is worth.
That's right.
So
it does pay me though.
But I do like getting out my tractor and just smoking my cigars. I feel good afterwards.
I know some people that love doing that, and they grab their 2 beers, they put them in their koozie, they put their headset on, and
it's just like leading up to it. It's like
acre lot.
It's like working out.
Riding a lawnmower.
It's like working out. When you go to work out, you don't look forward to it beforehand, but after you're like, I feel really good. But anyway,
all right,
Tony, what do we got?
All right, man. Earnings. So let's talk about a recap. Let's talk about one of our research firms came up with a great article today, an analysis on some of these brick and mortar companies using the word shrink in their earnings calls, and we'll talk about what that means, and then NVIDIA. So the recap, what I've noticed so far is that we have had sales growth and earnings is still down. So margins are being compressed. It's just not as bad as they thought it was. Walking into earnings season, they were expecting almost a 6% revenue or earnings growth, and we're at -3.5%. I don't know. I mean, it's still negative, but I mean, I guess it's not as bad as it was. One of the crazy things, though, is that one of the worst sectors on earnings growth was healthcare.
Yeah,
I really found that interesting because sales growth was positive, but man, their earnings growth was like -30% or something like that. So in the healthcare sector, there still must be a lot of inflation, maybe trying to get people to come to work. The insurance companies aren't keeping up with the cost of what's going on. There's more digging to be brought into that. But also, if you crash earnings expectations that much, maybe next year they're going to beat the pants off everybody.
Well, remember, healthcare is more a defensive name to own because usually earnings hold up, right?
Right.
And what's interesting, maybe people just are trying to get that last push towards, I'm not going to go get that procedure. I'm going to go enjoy my summer vacations now and not worry about getting the surgery that I need that will put me down for 3 months. Maybe this is the last push before screw this. I will get my procedure done next year because I'm not going to go out and spend my money anyway. I don't know. You never know.
The elective surgery industry is back to pre-COVID levels. So I would say on a going forward basis, the healthcare sector, I think I talked about Edwards Technologies last week on TD Ameritrade, and it was more about how they're one of them and Medtronic are the leaders in heart valve replacement. 95% market share, and everything's kind of lining up. Their revenues are back to pre-COVID levels. You're having workers back to close to pre-COVID levels, so people should be doing that. But you make a good point, Luke. I mean, it could just be seasonal downturn for healthcare, just because people are putting things off until.
I also think healthcare might be actually estimated to be lower than what it will come in at maybe a couple years down the road, like revenue and margins, because I think people became unhealthier over the past couple of years with COVID. I talked about on Scott with the Cow Guy a couple weeks ago, people are drinking more, it seems like, smoking more, nicotine. It's, Uber Eats was big during COVID. People got addicted to Uber Eats and stuff like that. We talked about how kind of it's unaffordable now for most people.
I did a Uber Eat yesterday, and I just reminded myself on how much I hate it. Like I paid $40 for 2 salads from Panera.
Here's my issue. Economics is behavior and psychology. No, it's not about money and finance. It's about psychology and behavior. And when you can go to Taco Bell and get a $9 meal for 2 days, essentially, because I didn't even eat all of it, which is not like me. Maybe I'm just actually becoming more adult. I don't know. I don't know what's happening right now, but I can't eat as much as I used to. So my $9 Taco Bell meal is now, I had leftovers for today, which kind of sounds disgusting in Taco Bell's 2 days. But my point is, $9 Taco Bell's meal is cheaper than going to the grocery store. Because we spent $150
But it's so unhealthy, though. There's a lot of fat, a lot of carbs, there's a lot of preservatives.
I'm not saying you have to do Taco Bell, but frankly, you get my point. If you can get a
$10 meal. That's the phenomenon that's going on.
It is expensive to eat healthy.
But do you think people are going to eat? Do you think people are going to eat healthy, or they're going to spend the $10 Taco Bell meal and put on some weight? People are becoming unhealthier. Is my point, because it's cheaper to be unhealthy.
Yep,
yeah, it is absolutely.
So healthcare.
Anyway, and then so that's healthcare. Our one research firm came out and was talking today about how the word shrink is becoming more prevalent for retailers, primarily more of, I guess the brick and mortar type of companies, in shrinking as in the shoplifting. It is starting to really eat into margins. You have Dick's Sporting Goods. They had a really bad earnings call. And they downgraded all of their earnings forecast because of this plague of vandalism and stealing. You had Foot Locker again. They came in. They had a really disappointing. So now you're starting to see I would look at Dick's and Foot Locker as that discretionary consumer product, right? Yep. Sneakers, sports goods, things like that. So again, we've talked about it in length on many shows, but the consumer is being squeezed, and now you're starting to see it on these I would say higher end discretionary items like sneakers and sporting goods and stuff. So I thought that was pretty interesting.
It's doubled in 5 years.
What?
So shrink was $50 billion issue in 2018. Now it's $100 billion issue. It's doubled. The amount of theft has doubled in 5 years.
There's $100 billion.
$100 billion
of theft?
Theft.
Wow, falling off the back of the truck stuff, huh? Nice.
So, and what's interesting, this shows me, again, coming back to the consumer behavior types of economics, this shows me how materialistic we are in today's world. People aren't stealing the groceries, the necessities, right? They're stealing the Louis Vuittons, they're stealing the Nikes, like you kind of talked about, Dick's. Like, no one wants to work for crap anymore, and it really. They want all these materialistic things, but then they don't work for it.
I forget, like what is it in like Chicago? Like one of the Louis Vuitton stores, you can't come in without an appointment. Like they lock the door, and you have to have an appointment to get in.
Yeah,
that's crazy.
I saw it in Vegas when I was in Vegas about a year ago for a conference I was at. I saw people get rejected away from Louis Vuitton. They're like, you can't come in.
Really?
Maybe I was in a suit. Maybe I looked the part. I don't know what it is. They let me in just because my girlfriend wanted to go, and she's not allowed buying. She doesn't buy Louis Vuitton purses.
Wow.
It's too over our stuff. But she wanted to go look around a little bit. We made it in, but they do reject it. They do reject people if you don't look the part.
All right, and now we have I think Colin, one of our CFAs who writes a daily blog, I think he said it's the the videos reporting today. And I think this headline of his email was the most important earnings call ever today, like of the world or something like that. And it is. This is like the last shoe to drop, or just a report of all the big companies of everything. It's NVIDIA right now, and I don't know what I have my take on NVIDIA. What do you guys think? Is it the life-changing technology company of the future? Is it going to be bigger than Apple and everybody else?
I was looking at the options chain. I don't want to get too far deep into this because it could be over some people's heads, I guess. But what's crazy is it's trading at like $450 a share.
Yeah.
$600 options are still trading for like $2 premium, which means like it's pricing in like it's possible to get to $600.
Yeah.
Like and also you go all the way down to $300. They're pricing in like a 20% move.
I'd be lying to you if I didn't look at the 30-day options myself.
But the 20% move, like, just put this in perspective. It's a $1 trillion company now. Like 20% is like $250 billion.
Yeah, it's ridiculous.
Move. Like that's a lot of money, either made or lost, right? Here's what I think is going to happen. I don't think things are going to change much in one quarter. They're not going to say last quarter, hey, this is AI is the most amazing thing in the entire world. Our growth is going to be exponential over the next couple of years. They're not going to say that last quarter and then renege on it this quarter. What I do think is going to happen is I think the market's pricing in like these extreme expectations. It's going to be somewhat of a buy the news, sell the news type of, or buy the rumor, sell the news type of event. I do think initially the response is going to be positive. I think initially the markets after hours, maybe even open tomorrow, could be pretty dang good. And I think it's going to sell off throughout either the day tomorrow or sell off over the next couple of weeks into, after this earnings report. So I think initial reaction is going to be good, and then just it's overvalued for a little for either earnings have to catch up to the valuation or valuation has to catch up to the earnings.
Well, earlier this week, I think on Monday, the stock spiked like 8 or 9% on no news. And then it gave back about half of that over the last 2 days going into earnings. So there's two things that I noticed. First of all is, chat GPT usage has gone down during the summer months. So is that really a sign of a juggernaut technology? if the usage has gone down? Because wow, that really correlates with kids in school and using this as a tool.
My mom's a teacher. She's tired of it.
Yeah, it's a cheating tool. I mean, I used to have my TI-89, and I'd put a couple formulas in there.
Guess what I had? I had Quizlet.
I'm
not a boomer.
I don't even know what that is. Quizlet?
Quizlet was a website that helped. There's a hack.
Yeah,
it's like a life hack.
I mean, it's a tool to get better grades. It's what it sounds like. I mean, obviously, there's you hear Walmart's putting it in their back office or their warehouses and stuff. But at the end of the day, it's going to take years for to really incorporate this into our daily lives. And how much do we want it in our daily lives? That's the kind of question I ask. But also, Taiwan Semi. Now they're in Taiwan and China's surrounding them on a day-to-day basis. So God knows what, whatever they say could be based off of being invaded. Yeah. But they did make a comment because they are the largest chip maker or provider to NVIDIA, Apple, AMD, and they came out and they lowered their guidance for sales down 10% over the next year. Is that a sign that we're in a technology boom? Absolutely not. So there's two things out there, but in NVIDIA, at the end of the day, momentum can kill whatever news line you have, because look at Tesla. Tesla was a darling for how long? How it made people really, really rich, and was it a life-changing technology? Sure. I mean, what? But how many cars are a Tesla is on the road today? 5-10%?
Well, I think the reason why NVIDIA ran up 6% yesterday or 2 days ago when this podcast came out, and I think it's up right now as we talk on this podcast, it's running up in earnings. I think it's because, we talked about the options chain, so many people got rich off of that AI boom earnings last quarter. If you bought a little bit out of the options money, you could 20, 50x, 100x sometimes your money on those options depending on what you bought. So I think a lot of people are expecting the same thing. Hey, I'm going to throw $1,000 into this thing and try to make 10, 15, 20 grand overnight.
That's another excellent point. I completely agree with that.
The one-day trading options?
Yeah, they're just trading because that's what this market, and this is the concerning part for the long term. The market, because of access, because of people seeing people get rich quick off of it, which the 1% you see get rich quick, there's 99% that lost all their money, right? But when you see that, the market turns into this gambling thing. I think a lot of people fall
That's
for
how
that.
people get wiped out.
Yeah.
I mean, you get one bad... I think we talked about it before the podcast. They're talking a lot about how the mid regional banks are going to have a new provisions because of all these high interest rates and looking, the government's looking for cracks in these mid-sized banks. Yeah. Man, what if another bank goes down? What kind of jitters would that ripple through the market?
Yeah.
Right.
Same thing that happened in 2007, 2008.
Right.
Treasuries yields go down like crazy. Treasury bonds rise in value. Market sells off.
Yep.
That's what it's saying. It's credit event. That's what I've been following Michael Gayed, Gayed, a lot on Twitter. I think he's got a lot of interesting content. He's very in your face. If you don't like cuss words and in your face, don't follow him. But
what's he do? What's he talking about?
He's like a portfolio manager. He's got like 800,000 followers. I mean, he's been in the game for a while. His dad was like the father of some sort of economics or portfolio management tool.
Gotcha.
But yeah, he's been very outspoken that March was not the last credit event.
Yeah. How could it have been?
When rates go, when mortgages are now at 7.5%, almost 8%, and things broke when mortgages were 6.5%, and when Fed funds was 4.5%, and now it's almost 6%. Like, yeah, things. You can't tell me everything's just fine and dandy.
Yeah, I saw something on Twitter that houses are the least affordable than they've been since 2008. And look what happened then, right? That we had a huge housing correction. So we'll see, man. If interest rates come down, you will see a huge downturn in the price of a house.
Look at right now. I mean,
there's
as we're talking. I mean, I can just report on it. Bonds right now are up a lot today. One of the first days, bonds have been selling off like crazy. Yields have gone up like crazy the past like 2 weeks. But now TLT long duration bonds are almost 2% today. I mean, could this be the start of some, worry start to come back and flocking back to treasury bonds, driving down yields? I don't know. Could be.
Yeah.
Who knows?
All right. Well, one way for us to all look foolish, let's give our prediction on NVIDIA so that when this posts tomorrow, we can see what's right and wrong. D, what do you think?
Yeah, I'm right on the buy the rumors, sell the news. I think, it'll be pretty ho-hum reporting, and the stock price will go down a couple percent.
That's it? Just a couple percent move?
Yeah.
All right.
I think it opens green and sells off, yeah. I think it's kind of talked about. Like, it could be a positive 5, 10.
Because it's reporting after hours. You think it's going to spike?
I think it's going to spike after hours, be green, and maybe even be green like if they open tomorrow, and then it might end red.
Okay. All right. I feel that every analyst just loves NVIDIA. $600 a share plus. Like, man, that sounds like a trap. Why wouldn't you just pile into it? Right? Hey, every analyst has a minimum target on $600 for this stock.
Yep.
Pile in, man. Why wouldn't you? We're looking at 40 to 50% increase. Like, that's where I get squirrely.
Yep.
That's where I'm like, that doesn't make a lot of sense. Like, everyone and their father's going to own NVIDIA. Everyone owns it. I mean, I guess everyone owned Apple back in the day, and Yahoo and Google, and maybe it's just the run up of one of the soon-to-be mega companies, and if you weren't on board, you're stupid. But that scares me though too.
Yeah.
So, I think they come in with a lackluster number because of the drop off on GPT or the Chat GPT usage over the summer, and I'm going to predict maybe a 10% pullback within a day of reporting. Because Luke, you might have an angle on that, like the 1 day traders. Yeah. Pump that thing up and then after hours and just sell like at 9:31 in the morning.
Wherever it opens up, like if it's up green, they're 9:31.
They're gonna bolt, right? So we'll see how that reacts tomorrow.
Supply and demand, my friend. That's all market is.
All right, moving on into recessions. So headline news today on Yahoo Finance was professor behind recession indicators with a perfect track record says it is way too early to call off an economic downturn. I talked about this last week on TD Ameritrade and how funny it was in the beginning of 2023 that nearly every analyst was predicting a recession. And now I feel nearly every analyst has capitulated and said, no, there's no way there's a recession. This thing's going to come in and soft landing, coming in hot, right? But man, every indicator that has ever predicted, and history tends to repeat itself, but not all the time. Every indicator, inverted yield curves. You can get a 3-month Treasury at 5.5% versus a 10-year at 4.25%. That the bond market is typically not wrong, right? So when was the last time you got a 1-year CD paying better than a 5-year CD?
Yeah.
That doesn't really happen very often, right? Again, every analyst in history is on the same page in the beginning of the year, and they all capitulated. Again, all just kind of scary items. Like, man, when you have everyone swung to a recession, didn't happen. Everyone's swinging away from a recession, and it still doesn't happen.
Well, if things were fine and dandy, this goes back to the whole thought process between interest rates and inflation.
Speaking of inflation, they're calling for a reacceleration.
Well,
in that
then
too,
that's
right?
what. So that's what I'm saying. So inflation, they say is at 3.2, which whether you believe it or not, they say it's at 3.2. But treasuries, like we talked about, short duration treasuries are trading at 5.5%, like you guys talked about the past 2 weeks, right? We kind of hit on those points a lot.
Yep.
What's interesting is, interest rates usually track inflation. So if we thought inflation was killed and done and over with, treasuries would not be at 5.5; they'd be closer to 3 or 2.5.
Right.
So what is that? You can take those two different ways. Either one, you think inflation is going to reaccelerate, or two, there's risk out there and something's going to break. That's why you have higher yields, because no one wants to own treasuries because there's credit risk, right? Not necessarily treasuries, but mortgage bond or MBS, mortgage-backed securities, corporate bonds, junk bonds. That's why yields usually are higher. So take it either way. One, things are fine and dandy, but inflation is going to reaccelerate, or two, something's going to break.
Yeah,
that's how you have to interpret that.
I just think that this, any time of economic downturn, because I mean they've already, one of the Feds came out and reaccelerated GDP ratings up to like 5%, and that's bananas, because the consensus is somewhere in like low single digits, like around 1 or 2. But the job market is still good, right? And I think that's one of the biggest things propping all this stuff up. Yep. But what I find really interesting is that tax revenue has gone down this year from last year, and tax rates haven't changed. So if there's less tax revenue, that means there's less economic growth. There's less money being made.
Right.
That's how I interpret that. Yet GDP is still going up. And Luke, and you and I talked about this, and it's a lot of government spending.
Yeah.
Because
what I was about to say, yep.
Since the debt ceiling fiasco a few months ago, when they raised the bar, I think we spent $1.5 trillion in that time frame. Like, hey, we got the green light. Let's spend more money.
Yep.
And imagine that GDP's still positive.
I just can't wait till my lifetime and end of my life. Like quadrillion is thrown around. Like trillion's thrown around like it's nothing.
Quadrillion.
Can't wait till we get to like quadrillion. Like the next thing past trillion being thrown around, because we spend so much dang money. Yeah, one of the biggest inputs is government spending to GDP. So, okay, if inventory, I think what you got, inventories, like actual economic growth, everything else outside of government spending that projects economic growth, who cares if that's flat or down? As long as you're spending our money from the government side, GDP could be positive, right? So, I mean, that's the concern, is the government, every time the government gets involved, the trade-off is you have less productivity, less efficiency from the government, and then you also trade it off for, hurting middle-class America and productivity within middle-class America and all of us, right? So, yeah, we keep on down this road. Like, GDP could be positive, but doesn't mean that we're growing.
So I had this conversation with a client earlier this week, and it's funny because I heard this conversation back in like 2007, 2008, when I was getting into the business, and I was watching and listening to different analysts. And there was always a statistic where if debt to GDP levels get above 120%, that is usually the tipping point for a civilization to start going in the other direction. Like they were on the acceleration, and now they're on the deceleration. And back in 2008, when we had our economic crisis, like we were at that point of we were cresting right around 120% at the GDP. And then from 2008 to like 2020, we got back more to like an 80 or 90%. And now we have reaccelerated above 120% again. So,
well, one of the
that's
things,
very. I
again,
mean,
this goes
it's
back.
Something. They even took that statistic back to the Romans.
Exactly.
It was insane. Like, I mean, and think about in history, they were the largest, most successful civilization.
Let me give you a hypothetical scenario. If the government wasn't allowed to borrow money and print money, if consumers weren't allowed to borrow money as much as we are today, how much of growth would not have happened in the past 30, 40 years?
Well, think about like medieval.
If the credit card wasn't made.
Medieval times, man. All right, so I got pigs, you got goats. I need 10 goats, but I only have 2 pigs and not 10 pigs. I owe you 8 pigs.
Yep.
And then in 6 months I don't have those 8 pigs, I'm pretty much gonna die. That dude's gonna probably literally murder me.
So I almost got canceled.
Is that a little extreme?
No. I almost got canceled yesterday because I almost tweeted this. You stole one of my tweets. You basically stole one of my tweets right there.
Yeah?
But I didn't go full extreme. I was thinking about tweeting, in this society, if you don't want to pay back your debts, like, what do you think happened back in ancient times? You got murdered if you didn't pay back your debts.
You and your family.
I will put it out there on the podcast because it's different than putting it out on tweet. I thought if I tweeted that, I'd get canceled. It's like, oh, that's extreme. You don't pay back your debts. You're comparing that to getting murdered. Well, back in the day, people did.
Yeah, that was real life.
If you don't pay back your student loans, back in the day, you get kicked out.
Yep.
All right.
Well, that's probably a good segue into canceled / get off my lawn.
Yeah.
Since Luke has basically been get off my lawn guy for this entire podcast.
Better than me being it. I'm always
absolutely.
the get off my lawn guy.
Just an old soul. Just an old soul on my lawn chair rocking on the porch.
Those are underrated. Rocking lawn chairs.
I agree, man. I agree. So COVID might be coming back.
Yep.
All you see in the news headlines is new variants. How Moderna,
coming out of Canada. That's what I read. Is that?
Oh, really?
They say coming out of Canada.
Just Canada.
Everything's coming out of Canada these days.
Screwing us over,
right? The smoke, the forest fires, and now COVID. What are they doing up there?
Well, you hear in the headlines, Novavax, Moderna creating new vaccines for the new variants. You're seeing these stocks rocket. Like Novavax, when I was up 25, I think, % the past 2 days. Rocketing higher. People are getting concerned again. It's one of those things sometimes in society, there's an expression for it and there's a term for it. I don't know what it is off the top of my head. But when you create cause of concern or when you all talk about it, you actually make it happen. Like whether or not it was actually going to happen or not, the hysteria around it makes it happen, right? So the fact that we're all talking about it again, it's on the headlines, and kind of people are starting to worry about it again could cause another possible shutdown.
Yeah, I mean, again, you read Twitter enough, and it's like, I don't know what's real and what's not. But they had a TSA whistleblower come out and say that, it's being talked amongst Border Patrol and TSA that come mid-September, the mask mandate is coming back, and then eventual lockdowns. I mean, if that's being talked about, and then the question is like, okay, everyone coming across the border, are they going to have their Vax card while they're running across the Rio Grande? I don't know. So, I don't know, man. This is bananas. But I'm not. What are you going to do?
We're going to print another $20 trillion.
I'm very good point. Open up your wallets, and they're going to reflood those checking accounts with stimmy money. Is that what you're saying?
Yeah, UBI. That's going to be the push for UBI,
dude. I'm not. I don't want to wear a mask again. I mean, I think they're going to see a lot of pushback.
You know what? I just give up. We can't change it. We can't talk about it.
You're just going to put your mask in?
You're
going to put your mask on and roll over?
No, I'm not going to put my mask on. I'm not saying that. I'm just saying, like the path we're on, just gets bigger. Government gets bigger. Freedoms get taken away. It's just scary. I don't know. That's why I try to speak out about it, but
Yep.
I hope if no one shares this podcast and gives their friends hey, you got to listen to Capitalist Investor, no one's going to tune in. So you guys all should share the Capitalist Investor so everyone can hear this.
I at this point I just hope that the COVID talk is all just Twitter propaganda. That's all I hope. I hope it's just nonsense talk, scaring people, topics, like whatever you need to get a like on X, Twitter, whatever you want to call it these days.
Yeah.
So I was actually referring to something there. We are trying to grow the podcast a little bit. So if you have any friends and listeners or any kind of buddies, you want to share the podcast with, please let us know.
If you're a regular listener,
give us some reviews as well.
Yeah, if you're a regular listener, we'd really appreciate any kind of reviews, thoughts, even in a review with something you want to hear about. Type it in there.
Oh yeah, we always love that when people send in responses or email us or Twitter us, whatever it be, through social media. Let us know topics they want to talk about. I mean, we've had that happen multiple times before where it's a hot topic that we kind of just miss, and viewers want to listen to it, and we take it, we run with it next week.
Is Twitter like, hey, I got a tweet? Do we just I got an X now? Like how does that work?
No one knows.
I got an X now.
It's reshare, it's not retweet. Yeah.
Okay.
It's got an X. That's weird. Hey. The world's getting weird. You gotta go with it, though.
Yep. All right. Well, yeah, be a friend, tell a friend to tune in to the Capitalist Investor. We'd appreciate that. I got a lot of, several nice notes over the last 2 weeks about, kind of the planning podcast. So that was much appreciated. So
I feel like, thank God Luke's not here.
No, I think people appreciated kind of the positive spin on things. Before we came back this week and just talked recession again. But seriously, thank you all for listening. We really do appreciate it. If you have show topics, things like that, hit us up at info@swpconnect.com, and we'll talk to you next week.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.